Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right, so now we're well into earnings season, and we just got the latest results from Visa. Now, Visa is a stock that I admittedly don't own, but it's one that I like to follow because it has a lot of implications for the rest of the stock market in general, more than a lot of people seem to think. So, this was a great quarter for Visa. This was their fiscal fourth quarter ending at the end of September, so the third calendar quarter. And their revenue was up 19% year over year. Their earnings on an adjusted basis were also up 19% year over year. It's a bit of a slowdown from earlier in the year, but this is much better than analysts had been expecting. There are now over 4 billion Visa cards in existence. That number grew 9% year over year. The real takeaways are what they reported with payment data. So, what led to their higher revenue and higher earnings? Consumer payment volume was up 10% year over year. This really came as a surprise to a lot of people. Anyone who's listening to this knows that inflation is at its highest level in several decades. We're expecting a recession. Things are just not great in the economy right now. So a lot of people were expecting consumer spending to slow down from where it was last year. Remember, in the third quarter of last year, that includes most of the summer, things had just really started to reopen. We saw a big surge of demand. So a lot of people expected this third quarter to be kind of weak by comparison. But we actually saw consumer spending rise by 10% year over year. And that's globally throughout Visa's entire network. Visa's network processed almost $3 trillion, 2.93 trillion in payment volume in the third quarter alone. Roughly half of that was in the form of credit cards and half was in the form of debit cards. The number of transactions, meaning the actual number of payment transactions they processed, was up 12% year over year. And this chart's really interesting because this is a 3-year comparison where you see the numbers on the left. 100 is the spending level that we saw in 2019, so in pre-pandemic times. Consumer spending is 47%, give or take, higher than it was in comparable 2019 periods. So, fantastic consumer spending. This has implications for the rest of earnings season throughout the market. I think this kind of indicates that earnings season could pleasantly surprise some people. This has a lot of implications for the banking industry, for the advertising industry. It's been a big fear that advertisers are going to pump the brakes on spending because consumers aren't spending money. Now that we see that's not the case, so maybe advertisers will spend a little more than expected. There are a lot of big businesses based on advertising. There's a lot of different companies that have lower consumer spending baked into their stock price right now in the 2022 downturn. So this could have a lot of big implications for them. I'm really curious now to see what the rest of earnings season has in store. In other news, Visa increased its dividend by 20%. Still not a great dividend payer, but that kind of came as a pleasant surprise to its investors. Announced a new $12 billion buyback plan, spent almost $12 billion in buybacks over the past year, which kind of implies to the market that management thinks the stock is a good value. So great quarter for Visa, but more importantly, the higher consumer spending has big implications for the rest of the stock market. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.